Okay, we're live. Hello and good evening to everyone. Welcome again to another episode of the Rinker Plus Show Live, a special segment called the Ask the Expert Anything. And this week we have our insurance expert, Priscilla. Welcome back to the show. Oh, you're muted.
Hi, Pang. Hi, everyone.
Okay.
For tuning in today.
All right. You doing good?
Yep.
Okay, cool. So this week, right, we're going to talk about something. I know the title sounds a little bit clickbaity, but honestly, when we talk about life insurance, everyone seems to assume that there's a few things that you need to do when it comes to life insurance, and over time, these assumptions they kind of turn into misconceptions. And I know also when we talk about, when we're discussing our topics, Priscilla, I know I talk about this every week, but when we talk about certain topics and when we realize that, there are some things that just take, in society or, when we talk with our friends, suddenly you hear like, what, why is this? This is not correct, right?
Yep.
There's a lot of misconceptions and some myths that really take hold. And when it comes to life insurance, we've discussed this. We found like three really big ones, and I think we're going to start pretty quickly. We'll cover this ones, and then we'll take some questions from Slido. We'll take some questions from Facebook comments and YouTube as well. Yeah. So let's kick things off. The first one, the most important one, I've even I have heard this, right, and I've sadly fallen for this one as well. Sad to say, but the one of the biggest misconceptions is that as early as possible, as in when you start working, the first thing that you get is life insurance. So take it away. I want to hear what you think.
Well, in my opinion, I would think that the first insurance that you should be getting is a medical insurance. So, medical card that covers your hospital bills due to private hospitalization.
Right.
So, life insurance is something you should get if you need it. Okay, because not everyone actually needs it. For example, I am single and I have no dependent. So if I were to die tomorrow, I have no debts to live on, to give it to my to pass on my debts, my credit card debts, my property debts. To I don't have any of it to pass on to my family members. Then I do not actually have to get life insurance, correct? Because if I were to have a life insurance and in that position, then it will just pass on to my parents and they don't actually need it.
Right.
But of course, it's based on your preference. You see, some people, some clients, they prefer to give a certain amount to their family members. But if we are talking about some savvy tips, you have to really, really look into whether you really, really need it or not, which we will cover later on as well.
Yes. So I remember we were talking about this one offline just now, and some of these calculations are pretty interesting, right? Like, so for everyone who is curious, how do you calculate a suggested or amount to insure yourself? Like, stay tuned. We will cover that part. But I think coming back to this one misconception, right? I think you're right. Like, coming from personal experience as well, not a lot of people actually say, when we've just graduated, a lot of things they say, like, you need to protect yourself, get
Yep.
insurance. But when you say get insurance, a lot of people just kind of go, okay, they're talking about
Life
life, right?
insurance.
or
Yeah.
or go for like those investment linked plans
Or
where
savings
you get.
plans.
Yeah. So actually, like, maybe let's reiterate what you just said, right? Like, probably the best way to protect yourself when you're first starting out at work, as an adult, as a working adult, is to protect yourself from medical bills,
Yep.
which
Yep.
can be really crazy. We've covered some of those topics that the last round we spoke, right, with COVID-19 treatments, and how your medical insurance can
Yep.
actually really, really be really important at this point in time.
Yeah.
So,
But I have to add on
mm,
a thing though. I think it's the misconception here saying that as early as possible should be you should get it while because when you are young you are tend to have lesser sickness, lesser condition,
right,
because if you were to get it later on, okay, you might have some conditions, and when you were to buy life insurance, you might get rejected, or you might pay a higher
higher
amount
premium.
compared to other people. But again, it really needs to evaluate whether do you really need it or not.
Yeah, so it all really comes down to personal preference
Yes.
in terms of whether you should get it or not. But again, Priscilla's top tip right here is really don't think about life insurance as the first thing that you need to get.
Yep.
Rather, take a look at medical insurance, and that way you will help yourself a little bit more, because the industry, not industry, I think what we always talk about behind the scenes is that medical insurance helps you, but life insurance helps your loved ones,
Yep.
right?
So
Okay.
it's important to save yourself first.
Yes, protect yourself, guys. Okay, let's go to the second one. So the second misconception here, again, there's a lot of assumptions when we first start out as a working adult. So I'm going back to my personal experience, like 10 plus years ago. When people say like you need to get life insurance, you think about that one where you pay 200 ringgit a month for your whole like 50 years policy duration, right? But actually there is more than one type of life insurance, right? So here the misconception is that everyone just kind of defaults to what everyone would know as the investment linked plan. But here's the deal, right? There's more than one, and Priscilla, I'll let you share this one.
So there are few life insurance out there. The common ones would be term life, whole life, and investment linked product. So the difference between each of it is somehow summarized in this table.
Yeah.
But the premium and the most distinct difference would be the premium and the coverage period, I would say. Because for term life, it will be low, the entry price is low, and but compared with whole life and investment linked product, okay, the premium for whole life is generally higher because of the guaranteed cash value that they have, and they cover your whole life, whereas term life is only for certain coverage, certain period of time. So which makes sense that term life is much affordable. Okay, and then term life also you cover for 30 years. If anything were to happen on the 31st year, okay, 31st year, then there will be no payout, no cash value. So which is why term life is much more affordable than whole life and investment linked product. So another thing that I heard very, very often is that people that buy investment linked product, then they'll be asking me, hey, this product that I bought, right, this investment linked plan for life insurance, I paying 200 ringgit per month. My agent say will last me 200 ringgit for my lifetime one. That is not true. Okay,
Oh, is it?
it's not true, because
Okay. Okay.
investment, there's nothing guaranteed for investment when it's investment linked product. So the risk, right, lies on you. If let's say the you are supposed to pay 200 ringgit, and this is able to sustain you until 80 years old, assumption that the fund will be able to perform at 8% every year based on the fund that you choose. So if the fund is not being able to perform at that level, then there is a high chance that you will have to increase your premium. Yep.
Back online, guys. Okay. Hello.
Okay.
Okay. So wait. Let me get this clear, right? Like, if you have an investment link insurance, right?
Yep.
Investment link plan. Uh, your premium may not be the same for the duration of your plan,
Yes, it might not be the same.
and that
Cost
depends
of
simply
living.
because of the investment returns that
Yes.
may not be enough to cover your future investment insurance
Cost
costs.
of insurance. Yep.
Right. Right. Okay. Wow. That's definitely something new, and some you mentioned that's going to be stated somewhere in your insurance policy as well.
The sales illustration
A sales
and
illustration.
product disclosure sheet. Those are the two things that you really, really need to look into it. Don't just rely on what your agent say, but
Right.
go through it, and it's quite easy to understand. Okay,
Cool.
so and then also another thing is that term life, whole life investment link product, I'm not saying that whole life is not good, investment link plan is not good, and term life is the best. I'm not saying that. But
Yeah.
it depends on your preference. Some people only want coverage for 10 years, 20 years, or during their working times. So then they can go for term life. But some people prefer whole life. Then they can go for whole life or some investment link product. But they will have to bear in mind that investment link product entry price could be lower than whole life, but the risk lies on the customer.
Right.
Yep.
So going back, right? Like I think we talked about something along the line. So I think a lot of times people always also, if the assumption is that there's more than one type of life insurance, they will always think of it as term life and whole life.
Yep.
So now I see this table. It's like there's whole.
Okay, Pang, I think Pang's connection is not that great, but never mind. I'll just go on the live myself. So okay, so these are the main popular ones. The popular ones right now is the investment link product, which it's more affordable nowadays. So which is why people go for it. But you will have to bear in mind, okay, that the risk lies on you. Okay, and you will then have to take into consideration when you go for investment link product. Okay, so now there's another how do I say common statement that I've heard is that, oh, should I then buy term and invest the rest, or should I just buy an investment link policy product from the insurance company? So I did some calculation. It's quite, how do I say, it's quite complicated, but I will not bore you with the calculation how I come about it. But so this is an example. Let's say, right, I don't have a life insurance policy. I want to get 100,000 coverage until I'm 80 years old. Okay, so I have two options right here. First one is I buy 100,000 term life, which means a pure insurance policy, and then I invest the rest. I invest the rest into, let's say, mutual funds. So what you are essentially doing here is that you are building your own investment link plan. The second option is you just straight away buy an investment link policy from insurance company. So I was thinking I want to compare with the same amount of money, same cost, okay? Both option, same cost. If I were to invest it by myself, what would my return be like as compared to just letting insurance company to manage it? So here's a graph for you to compare the total investment value between the both. Okay, both provides the same insurance coverage, which is 100,000. Okay, but there is a drastic difference, as you can see here. Okay, there is a drastic difference if we were to invest ourselves with 9% return as compared to the return illustrated by the insurance company at 5%. Okay, it's a big, huge, about 675,000 just by using the method of buy term and invest the rest. So maybe you might not be convinced, because I am comparing 9% together with another one is 5%. Okay, but when I changed the calculation to our own investment to be projected with 5% return, it is still higher than investment linked product. Okay, so which is why in this case it would be better to how do I say, buy term and invest the rest if you only want to cover till you are 80 years old. So another question that you might be wondering is that how to get this 9% correct? Well, that's how to get this 9% return by doing your own investment. So that is something you will know if you were to join our Lazada Academy, which we will have next month, or our financial planning service. So after attending this academy, you will get the know-how on how to do it yourself. But if you have no time, then perhaps you can then invest 699 with one of our CFP service, financial planning service. You will be able to get much more than compared to the 699 ringgit. Yep.
Nice.
Pang is back.
Yeah, my goodness, my electricity just tripped, so I
Oh
had to
my God.
run down and So sorry about that, everyone.
No.
But yeah, no, I mean, this graph, we were talking about this backstage as well, Priscilla. It gives a really big idea of how big a difference that you can make with just like a 4% difference per annum, and gives an illustration of how the buy term invest the rest concept has been around and has always been popular among some groups of people. But I think the assumption here that we have to make as well, right, Priscilla, is that the discipline required from this policyholder to be consistently investing the amount instead of, I save this amount from buying term rather than ILP, and I have
Yes.
extra money to spend every
Yes.
month. So that's a pretty important thing to remember, is that you take the money here and you are constantly, dollar cost averaging every month the same way that.
Okay, it dropped again. So what Pam is trying to say is that you are essentially building your own investment link policy rather than letting another insurance company to manage it for you. That will require you to pay commission fee, management fees, insurance profit. So instead of doing that, life insurance, you can get it online through the insurance company itself, like for example, Life, AXA, FWD. These are the platforms that you can go for if you were to save, how do I say, go for term life and to, how do I say, save some fees. Yep. So let's see. So the other more common misconception of life insurance is that you think that your life insurance coverage can be any amount that you want. Let's say you want 500,000, 600,000, but there is actually a mathematical way to calculate your life insurance needs. So the simple formula is by 3 to 5 times of your annual expenses. But if you were to use this formula to calculate, then it might not be accurate or you might over insure. Okay, so the more technical way or more accurate way to go for it is that you can use this calculation where your financial obligation that you want to cover when this person pass on minus the existing assets that can be used to offset. So you might not understand. Here's an example that you can refer. If Mr. A, he's earning 60,000 annually, is married and has a son at 3 years old. If he were to pass away the next day, he wants to make sure that his family will be able to receive 45,000 annually for the next 20 years. Okay, and then he also wants to have an education fund, okay, for his son. So it's 120,000 in 15 years time. So he wants to pay off all the loans and does not wish that his house or car to be sold upon his death. So this is his assets and also the liabilities. So how do we count his life insurance need? Is that the financial obligations that he has, which is calculated based on the present value that he will need if he were to pass on the next day. The second one is the children's education fee. Okay, so he will need 57,000 if anything happened next day, and then the family members will use this the 57,000 to invest in somewhere that is able to give them mutual funds or exchange traded funds that are able to give them more than 5% or 9% return, and then also to settle off all his outstanding loans. So after minus the financial assets that can be offset, then he only actually needs 616,000, okay, as compared to 876,000, because you should minus off assets that you can sell, okay, so that you don't over insure. So there's a lot of things, a lot of times that we think that how do I say, you have to evaluate whether you need it or not just by using this calculation, so that you don't over insure and then paying how do I say, overpaying insurance, where this money will be able for you to go for investment or stuff like that. So that would be it. Then now let's go to Q&A session. Okay, if we have any Q&A from Slido, because I think I remember that there are few questions that are from Slido. Some of the followers of Ringgit Plus, we have dropped a total of quite a number of questions. Okay, so we are here now to answer them one by one. Okay, now let's see the questions. Now, there's first question saying that should I go for cheaper insurance during this pandemic, and any suggestions? So he's experiencing pay cut now and my income is around 1,000 only. Okay, so we'll need to make this clear. Is it life insurance? If it's life insurance, then again, it begs to whether do you really need it or not. So you can actually evaluate whether based on your financial situation, okay, after offsetting your looking at financial obligations and then also looking at your assets, do you still need additional fund to go for it? Okay, if you don't, then perhaps you don't have to get it. Okay, so if you really need life insurance protection, then perhaps you can go for term life. Okay, term life is for people that wants affordable life insurance. Let's say an example, 5 Life. 5 Life is that if you buy 100,000 for a 30-year-old man, it's about 18 ringgit per month. So it's pretty affordable for Malaysians. Okay, so I hope that is able to answer your questions on this topic. So the second question, should I buy life insurance for my child and my budget is quite tight? Okay, so this is pretty common because nowadays there are quite a lot of insurance policy out there that covers your children, okay, your kids. So in my opinion, I would think that for a young child that is not generating income, okay, it's best to go for a medical card instead. Okay, because that will be able to cover hospital bills to avoid you paying out of your pocket. So I would think that it is best to go for medical card because there is no need to go for life insurance as they depend on you, correct? And they don't generate income. So doesn't kind of make sense to me lah, at least to me, for a young kid to have a life insurance covered. Okay, so so next question, please. Okay, now, will my premium be the same forever? I bought investment type from agent. Okay, so like I mentioned previously, whenever insurance policy that involves investment, then it is not guaranteed. You can read through, if you don't believe me, you can read through your sales illustration, your product disclosure sheet, or even a policy contract. It will then say that premiums are not guaranteed and it is highly reliant on the fund performance. So it is the premium. I wouldn't say that it's guaranteed. Now let's go for the other one. Okay, can I buy life insurance if I have serious sickness? This is something pretty common because nowadays, even I myself have some conditions, that might not get a life insurance easily, But if you have a serious sickness, my advice is that you still go apply for one. Okay, if you really need it, apply for one. And if there's two outcomes from this, is that they either reject you, means to say they don't cover you at all, or they impose a loading to your insurance premium. Let's say a normal people is paying 1 ringgit for 100,000, but you, because you have serious sickness, then you might be paying 1 ringgit 20 cent for the same amount of coverage compared to other people. So this is the difference, I would say. So my advice is that even if you have serious sickness or even have some conditions, submit your application, and the underwriter will then assess whether they want to accept you or not. Okay, so that would be the answer for this question. Why is ILP still lower at 5% in this scenario? Why is ILP still lower? Oh, because ILP, when I compare even 5% return by using my own investment and the 5% return from from insurance investment link plan, is that, well, we have saved a lot of cost. Okay, we save commission fee by buying term and invest the rest. You save commission fee. You also save you also save the insurance profit and management fee. So this is quite a big sum, even though it's like maybe few percent, 5% or 20%, but in long-term wise compounding effect, it will then make a huge difference. So I hope that we will be able to answer your question. COVID die can claim. Okay. So we actually had a session 3 weeks ago to talk about COVID specifically. So perhaps you can also run through it again to maybe perhaps this will answer a question. But let me give you a straight answer is that COVID die, yes, can claim, because life insurance, the only exclusion is that the first year, whether you are sane or you're insane and you suicide, right, then it won't pay. But if other than that, then it will be payable. Yeah. I'm single. I have life policy over 20 years. If surrender, I'll get back a good sum of money. If continue, my annual premium is about 80% of yearly cashback. If continue, my annual premium is about 80% of the yearly cashback. Should I continue? Then you will have to evaluate. You have already paid 20 years. A huge sum of it goes into there. Then, and also, what is the coverage like that you are getting? If you are not getting a lot, but the premium that you are paying is quite hefty, then perhaps it's best for you to withdraw it and then invest somewhere. But that also depends whether currently your condition. Okay, I can't say for sure without looking at your whole picture whether how is your health condition. But if you are a healthy person, then perhaps you can withdraw this amount of money and then use it elsewhere to invest, and then buy a term life, which is much cheaper. But if you have already 20 years, I would think that most of it you might be losing money if you withdraw it. So yeah, again, I won't be able to know for sure unless you come to us for financial planning service 1-to-1. Then I will then evaluate on it. Yeah. Is there a rule of thumb as to how much of my monthly income should be allocated to insurance premium? Okay, good question. I would think that, okay, maximum 10%, maximum, because you do not want to be paying 20 or 30% for insurance premium, where else this money could be used for something else. Let's say you do not want to be tied down just because of insurance. Okay, so maximum to only allocate 10%. That is that's a rule of thumb of it. Yep. If one insurance is rejected, what other option available for people with pre-existing illness? Okay, that is a really, really good question. Is that you can then go for life insurance plan. Some insurance company does this, is that they do not that does not require medical underwriting. Okay, when a plan does not require medical underwriting and they don't ask you any health questions, okay, then you can then go for it. You can buy it because they will not ask you any questions, any health questions. Means to say, you are buying 100,000. A healthy person is paying 2 ringgit. A not healthy person is also paying 2 ringgit. Okay, so it's all the same regardless of your age, regardless of your health, regardless of your occupation. There are products out there in the market. Okay, so go for those that guaranteed issuance of a GIO product. That would for the ones that is for pre-existing illness. But you have to bear in mind, this one, the cost will be much higher because the risk is higher as well, as guaranteed issuance product will attract people that has condition to buy. So when they attract people that have condition to buy, naturally, they have already put assumption that the claim would be high as well. So the premium will then have to be compensated. So I hope that you'll be able to answer this question. Now let's go on to the other one. So does it mean that applying for term life insurance is not worth it because there's no cash value? Okay, again, this is based on the graph that we have seen. Yes, term life, there's no cash value, but it is much more affordable compared to whole life or investment linked plan. So if you were to want cash value, then I would suggest you to use the remaining money, the extra money, to invest elsewhere that will be able to give you higher return than compared to the what is shown by the insurance company. There are funds out there that will be able to give you at least like annually per annum average 9% each year. But then you will have to come to financial planning one-on-one service or go for Lazada Academy, which is only 128 ringgit, but you will be able to know which fund that you should go for and what are the indicators that you should go find out to invest which fund. Okay, now next question. Which insurance provider in the industry provides the best coverage for COVID-19 at the moment? Okay, so this is quite a heated topic last week because Prudential says that, okay, now our medical card, okay, this is a bit off topic now it's about medical card, okay. Medical card, they cover hospitalization due to COVID, private hospitalization due to COVID. But I think yesterday or the day before, Great Eastern pledged a total of 20 million ringgit that they will be 20 million ringgit for all the claims due to COVID and private hospitalization that requires private hospitalization. So this is 20 million ringgit until the fund is exhausted. But there are some other initiatives as well from, let's say, AIA or Hong Leong Assurance, even Etika. But in my opinion, I would say it's Great Eastern, because Great Eastern, they actually mentioned that the claims due to COVID-19 will not affect future premium repricing. Okay, so you will have to understand, company AIA or even Etika, they say, okay, our medical card cover COVID-19. Okay, but COVID-19 is something which is require high amount of money. Frequency is quite high and severity is quite high as well. So medical card life insurance is about risk pooling concept. So if the fund runs out, then they will have to pay, premium policy holders will have to pay more to it, correct? But Great Eastern is able to commit and tell policy holders, say, hey, you claim now, it will not affect your future premium pricing. So in my opinion, I would think that Great Eastern would be the right choice. But then they have the 20 million limit. So this is something that you will have to take into consideration as well. Okay. I thought is hospitalization is related to pandemic. Then is it under exclusion? Isn't that true? I thought hospitalization is related to pandemic. I thought is hospitalization is pandemic, then it is under the exclusion. Isn't that true? Okay. Yes, certain companies, their exclusion for medical card. Okay, suddenly so many questions about COVID-19. Yes, they have exclusion, but then some companies, like for example, AIA and Etika, they don't have that exclusion. Whereas Great Eastern and also Prudential, they have the exclusion, but they made an announcement saying that okay, to help out Malaysians, they are willing to pledge, they are willing to take up this amount during this difficult time to compensate the policy holders if things were if they were to admit to hospital due to COVID-19. So I think we'll just that's the answer for that. Okay, now because it's 8:36, we'll just answer one more question. Okay, last question: should I buy medical card if my company already provide coverage? Okay, this is something like we're talking about medical card more popular. So you will have to evaluate few things. Okay, there are few reasons that you should get even though you have a medical card. Number one is that what if you are unemployed or you are in between jobs? Then you have no coverage during that time. And unfortunately, things happen to you. You wouldn't want that to happen, correct? Second is that perhaps you need to find out whether your medical card coverage is it enough or not. Okay. And thirdly is that when you retire, your company most likely your company will not cover you for the entire life, correct? So when you leave the company, you will not have the medical coverage anymore. And lastly is that you need to buy medical insurance when you are healthy, because for example, very common disease these days, condition these days is gastric. I have gastric too. So it was a bit difficult for me to get a medical card because insurance company treat it as a condition that might cause gastric cancer or gastritis. So you do not want this to happen to you, correct? So which is important to get a life insurance medical card when you are healthy. And if you were to wait until 60 years old only get it, which is after you retire, no more coverage from an employer, it will be quite a hefty amount. Or that time you probably have some conditions with your health. So my advice is to get it as soon as possible so that you will not be uninsured or you do not have a medical card in the future. Okay. Now, that I think that would be all. I saw some comments saying that please do a live session on medical insurance too. Okay, we will take note on that, and maybe probably the next round we will do a fully on medical insurance. So if you have any more questions, okay, don't please do put it in the Slido so that we will answer your questions by creating by answering next time, okay, by doing some content that you will be able to see it. And then if you have even more questions or you are interested to know about our Lazada Academy that will happen next month, okay, then you can actually attend it, which is 128 ringgit, or you want me or my colleagues, okay, my teammates, to provide you a one-on-one service, do check out Ringgit Plus Financial Planning. Just Google it. Then you will be able to get us for your financial planning service, and we will look at the entire financial situation that covers your assets, your liabilities, your expenses, and then your investment or insurance. Will cover the whole picture to make sure that you have a proper financial planning in your you have a proper financial planning. Okay, so that would be it. Hope everyone have a nice evening and stay safe, everyone. So that would be all from me. Thank you very much. Bye bye.